Right, hello and welcome. I'm still on CROX at the moment. I still want to do a bit more on it, to be honest. See what's going on. Mainly, I wanted to have a look at the debt. Obviously, we've seen that they were still in my spreadsheet. Yeah, we've seen that they appeared to be paying down. Wrong one. Here we go. They appeared to be paying down debt reasonably well over the last few years. 3 billion, paid off 1.3 billion in the last few years. Their simple free cash flow is very, very good. Here, last few years, 700 million. What's the average there? Yeah, 760 million. Lost a bit of sales in the US. Obviously, tariffs are going to have an impact as well on their production because they produce mainly in China and the Philippines, but their growth in China has been pretty phenomenal. So, so there's still a bit more to do on that. A few more questions I want answered, like I said, particularly around the debt, when, who it's owned by, because I can't remember if we went through that last week. I'm just going to go through it again if we did anyway, so I'm sorry. But I do want to have a look into that. And then I was going to ask ChatGPT if it can give me notes on any previous guidance that they gave in recent years to see whether or not they hit any of their targets and stuff. I don't know if ChatGPT can find me that. We might have to look through transcripts to see, but so that's where I was going to go with it. So interest coverage as well is very good. Their interest expense this year was just under 100 million, but 700 million free cash flow there. They're more than covered. To be honest, historically, they've always been more than covered. Right back up to 2015 was the last time they weren't. So I don't think the debt, to be honest, is going to be much of a problem at all. So let's just get the SEC up here. What we're on now, the latest 10Q. And we'll see whether or not they say a lot about what type of debt it is. So notes, there we go. Notes issuance. So I'll have to have a look then to see whether or not it's on FINRA. Let's see. The only problem with FINRA now is you can't put a ticker in. You used to be able to put the ticker in. They've changed it now. No, you can't. There we go. CROX. Here we go. 2029 is the first batch. Which did that say that there? So maturity 2029 in thousands to 350 million by 2029 with the money that they've got. It doesn't seem like it's going to be too much of a problem, does it? 2031, another 350 million matures. I don't think currently, with the way their cash flows are, that the debt's remotely a problem, to be honest with you. Where's the spreadsheet? Jumping around a bit here a minute, but what have we got down here? So the cash at the end of the period, at least for the last 3 years, has grown, reasonably steadily. I don't know. At the moment, it doesn't seem like the debt's any a problem at all. And bond markets, I guess the prices of the bonds will tell us what the bond markets think about that. 2029, 2031, both of them. Only got B ratings, which is a bit strange. 95s, 89s as well. I find that quite interesting, actually, because, 89's not cheap, is it? But the cash flows that they've got at the moment. Yeah. So very interesting. Like I said, I'm not sure that it's too much of an issue. Even by Whitesheet's free cash flow metrics, look, they've been raking it in recent years. Total of 3 billion in 5 years. 3 billion in free cash in 5 years, and there's 1.7 total debt left to pay. 1.8 total debt left to pay. Only paid off 100 million last year, which is quite interesting. What's the total of that then? We probably won't see a lot of it. Whether or not they're going to pay it down before maturity, I don't know. What's that? 700, 120, 40 hours said there. What an idiot. Total face value of long-term borrowing, so there's 1.4 billion. You know, in recent years, they'd pay that off in 2 years on a free cash flow. So, got a revolving credit facility here. To say much about that for $1 billion, increased by further 400 million, subject to certain conditions. Does it have anything on their notes? Senior notes, here we go. 2021. Was that around the time of the purchase of Hey Dude? It's Hey Dude, isn't it? Never heard of them, so I can't remember them. Why did they take them out? Let's have a look. Was it all taken out in 2021? 350. 2029. Additionally, 2021, the company issued 350. 2031. Okay, so that's ChatGPT. Ooh, in capitals there. Did CROX issue senior notes in order to finance their purchase? We'll find out if it's Hey Dude now, because they won't know. Is it Hey Dude? Oh no, that's not right. Must be Hey Dude. Yeah, it is. Alright. The more I said it, the more it sounded like a silly name, but there we go. Issue senior notes. CROX issued 350 million. These funds are intended for broad corporate purposes, which may include acquisitions, but not earmarked solely or explicitly for Hey Dude. I don't really know where they're getting. Oh, that's from their own investor relations. Okay. When CROX completed the acquisition of Hey Dude, it financed through 2 billion senior secured Term B loan facility. 50 million roll down from its existing senior, okay, plus 450 million in CROX shares issued as an equity consideration to Hey Dude's founder. Okay. So the share count has decreased in the long term. The term loan helped to cover the bulk of the 2 billion cash portion of the deal. Here we go then. Primarily to fund Hey Dude, yes, directly tied to acquisition, yes, used for Hey Dude acquisition, equity shares, yes, part, not specifically. Okay, so there's 2031s. What can we read on that then, the term loan? Company Energy Credit Agreement, Citibank, among other things. Oh, it says there, look, what an idiot, I didn't need to ask it, I just needed to read a little bit further. Finance portion of cash consideration for the Hey Dude acquisition. Original term loan B credit agreement is for an aggregate term loan of 2 billion, okay. Principal amount of 2 billion. Amendment, the outstanding balance was 820 million. Wow, okay. Among other things, they've paid that down quite quick then, haven't they? Prior to February amendment, 2024 amendment. Okay, so consideration of Hey Dude, which was amended. Okay, so does it say what the amendments are? Term loans are secured by substantially by all of the company's subsidiaries, guarantors, assets. Okay, so it is asset backed. Does it refinancing term loans are secured by substantially all of the companies and each subsidiary's guarantors, assets. Okay. with their obligations arising from and is scheduled to mature on 2029, subject to certain exceptions set forth in Term B credit agreement. Additionally, subject to certain conditions, including without limitation. Okay. What were the amendments then? See if ChatGPT can tell us. The term loan B was amended twice. Do we know why? See what they can tell us. This amendment was structured as a leverage neutral refinancing on existing term loan B. Key changes: reduce the alternate base rate margin points. Okay, that's good. Cut the adjusted SOFR term margin by 50 basis points. Achieve lower interest rates without altering leverage covenants or maturity. Demonstrate CROX strong credit profile and ability to generate free cash flow. Yes, well, we've seen that. Since the Hated acquisition, CROX had already repaid $850 million in debt, balancing debt reduction with share repurchases as part of a long-term leverage strategy. Okay, so that was the first amendment. The second one was aimed to refinance the remaining outstanding balance under term loan B with a new tranche, optimizing financial terms. New 820 million tranche, replacing the existing outstanding balance. Lowered interest rate margins further, wow, by a lot. Reversed, yeah, it was quite a bit. As of March 31st, CROX have fully drawn this facility with approximately 810 million still outstanding. Financial covenants remained in compliance. Okay. Who is this money owed to? Do we know that? Citibank. Our long-term borrowings were as follows. In thousands. Right, I'm going to ask a stupid question here. But does that mean that they've only got 500 million to pay? They've paid down another 300 million? This is me learning, by the way. This is like, I don't know an awful lot at all, so you're watching me learn in real time if you've not seen this come across before. I'm hoping that should I become a successful investor, it could be used as a blueprint for people to how they can go about achieving the goals that they want to achieve. What was my bloody question again? Okay, in the latest 10Q. Alright, hang on then. In a nutshell, focused on reducing the cost of borrowing, took that step further by completing refinancing existing balance for more favourable terms. Sorry, let's just answer this in a minute. Impacts on free cash flow and allocation, and then we'll ask whether or not this is one of the reasons why I like ChatGPT as well. Like, you can't be certain of the veracity of the data, but if it's got the stuff, it will link it. But sometimes it will ask me questions that I wouldn't have thought about, you know. So I find it worth using. Impact on free cash flow, lower interest expense, more free cash flow. I shouldn't. Well, it's simple, isn't it? It's obvious. Deleveraging, debt pay down. CROX aggressively paid down 850 million in debt since Hated acquisition. Strategy noted by the CFO is indicative of strong cash flow generation. Yep. Okay. Balanced use of debt. CFO emphasised CROX approach balancing debt reduction, share repurchases as they approach their long-term net leverage target. Lower interest rates increase headroom for both debt paydowns. Yeah. Improve liquidity for operational investments. Yeah. Reduce the borrowing costs and strong cash flow. For instance, reports show cash and equivalents rose. Total borrowings dropped. Capital expenditures decreased. This suggests freed up liquidity. Could be redirecting. Yeah, okay, makes sense. Lower interest rates, yeah. In a nutshell, free cash flow got a boost via reduced interest expenses, yeah, okay. CROX not only strengthened its credit profile but created more financial flexibility to support both. Okay, that's another thing, isn't it? I did say I was going to do at the end of the last video some peer-to-peer analysis. Let's just ask about that debt. It's got to be what it means, I would imagine. Where's the balance sheet? A minute. Long-term borrowings, 1.4 billion. Balance sheet. Long-term borrowings, they go 1.4 billion. So yes, it probably means they've paid down even more. I mean, look how fast they're eating into this debt. Latest 10Q shows only 500 million remaining on the, what was it, term B or something? Term loan B. Oh. Does this mean they've paid down even more compared to, didn't ChatGPT say there's like 800 million left? Am I just asking very stupid questions? There you go. Compared to the 820 million previously stated, it obviously means that, but sometimes it's nice to get it checked because my knowledge base isn't good enough yet to, yeah, there you go. Yes, it does indicate CROX have paid down an additional 320 million. Wow. They're hammering into it, aren't they? After the 2024 refinancing that reset the loan 820 million, CROX continued making scheduled quarterly principal repayments. In fact, their agreement stipulates 5 million principal is due each quarter. But beyond that, CROX accelerated paydowns. Alone, they paid off 105 million, which they likely contributed to the substantial reduction in term B loan, along with possible repayments on other debt facilities. Yes, they've paid down significantly more. Their commitment to debt reduction, particularly on term loans, led to a noteworthy decline. So, what does it say the interest rate was for this? Because they seem to be very keen on paying this one down. Does it say an interest rate? There you go. With no remaining borrowings, we have 500 million outstanding. Didn't even need to ask. Just read further, you idiot. You feckin' idiot. Yeah, okay. It looks good, doesn't it? Here we go. Seeing your notes. I read this bit, and some of it anyway. Okay. Okie dokie. So, who are their peers? Who are CROX beating with? Name their 3 biggest peer rivals. Let's have a look. Nike, Adidas, Deckers, okay. Dominant global leader in athletic and lifestyle footwear. Yeah, it competes with them in the cast. So the thing is, there's no one quite like CROX, is there? Another athletic footwear giant. You ain't gonna go running in your fucking CROX, are you? My kids have got CROX, and when they go outside and they're running around like loons, they're forever tripping over in them. I get this, though, from this point of view, I suppose. Strong brands. Strong brands. Everybody's heard of Nike, everybody's heard of Adidas, everybody's heard of CROX, love them or hate, and everybody's heard of them. More directly with CROX in the comfortable footwear often cited. Let's see who Seeking Alpha reckons peers are. Peers, there we go. CROX, Puma, okay. Didn't even mention bloody What's this then? Wolverine Worldwide. They look like they've done really well if that's a stock price thing. Wolverine Worldwide. Yeah, they have. Wow. Almost a triple. Well, 150%, so no, not almost a triple. Not far off it, mind. That's a significant price level. What's that now, though? From a technical standpoint. Been a floor previously. Significant floor all the way throughout. Look at that. Yeah, it would have been a bloody good investment though, wouldn't it, this year? That's all this year. That's all happened within, now, what, within 5-6 months? And they're paying a dividend. I'll do these tiers rank with the peers stated on Seeking Alpha, or are they much of a muchness? Does it in comparison CROX? I do quite like they're not, you ain't going running your CROX like I said, but brand recognition, Nike, Adidas, CROX, they're not in the same, I'm not saying they're in the same league, but everybody's heard of them, that's what I'm saying. Peer analysis, Deckers Outdoors, Birkenstock, Skechers, Wolverine. You're asking a really sharp question. How do peers mention match up against CROX peer groups portrayed Seeking Alpha? Tip ranks peer group typically top the rankings above CROX. Yeah, I don't want to know which one's the best. I want to know which is the most like company. If you cite Nike and Adidas along with Deckers, which wasn't part of Tip Ranks peer group, here's how they stack up. Strong, consistent peer across multiple lists. Other comfort-centric brands, yeah. That's what I mean. This is the thing that I don't like. Deckers appears to be the closest directly comparable peer, both in product comfort niche and Tip Ranks. Birkenstock and Skechers are also frequently compared with CROX. Yeah. Probably better off using these three, because like I said, you ain't going running in CROX. When I think of Nike and Adidas, mainly I think sports and sports casual. So it's probably Deckers, Birkenstock and Skechers. In Reddit investors' eyes. Competitors like this underscores how CROX may be fundamentally stronger on margin. Yeah, I get that. But at the moment, I'm just trying to find a peer that's most. Do they? I'm probably going to be asking too many questions now. Have CROX ever stated who they believe, who like their closest rivals are? Otherwise, we're going to go back to the other three, I think. Just having a drink. Russian Wikipedia. Here we go. External source and analyst coverage. Owler, never heard of it. List Nike, Adidas, and Deckers brands as CROX top competitors. Industry summaries also frequently include Skechers, Birkenstock. What is Owler? Never heard of it. Should I have heard of it? I don't know. Birkenstock. Let's see what shoes they got. Yeah. Alright, I can see that. Skechers. Shoes, yeah. I mean, Croc ripoff. Who was the other one? I think we're going to go with those because they are Deckers. Okay, never heard of them. I think I have heard of them. Deckers shoes. Yeah, alright. Let's go with those three. Deckers Brands, is it? Is that the same company? I take it. Yeah. They own Uggs today. What am I doing here? Wrong button. Deckers Brands, so we'll see ticker deck. Right, let's see if this comp spreadsheet does work. Deck. I'm going to have to drag the data in. Taking a long time to load, isn't it? Alright. Oh, have I? Now this is why. There we go. Might have to write that in again. There we go. Alright. Deckers Outdoor, is that the one? Deckers Outdoor, yeah, gotta be DCK quarterly. Let's get rid of these Crocs ones a minute. Easier to. Alright. One, here we go. Two, one, sorry. So for my on my spreadsheet for my comparisons, I generally only do 3 companies. Should probably do more, but comp 1 income statement, comp 1 balance sheet, comp 1 cash flow statement, and then comp 2, comp 3, same thing. Right, so that's in there, yeah. Income statement, balance sheet, cash flow. Right, let's fuck this one off. Skechers, I don't know what they're there you go, is that them, is it? Let's just check a minute, because Skechers, yeah, there you go, SKX. Right, drag this in. This can go in comp 2. Done it. Income statement, balance sheet, cash flow. Right, okay. And what was the last one? Birkenstock, wasn't it? What's going on here? What is Birkenstock's ticker? German shoe manufacturer. Birk. There we go. Right. BIRK. Interesting to see what their nominal currency is. Euro, yeah. Alright. Right. Income statement, balance sheet, cash flow. Get rid of this. Very unprofessional you having to watch that, but it is what it is. I can't get the internet where I live. Ooh. Decker. Simple free cash flow margin, very good. put these in, have I? Let me just put the price in a minute. What did I do? Sketchers and then Birkenstock. I forgot to do that. Right. SKX. Birk. Right. There we go. Now it's compiled a bit better and we got all our comparison metrics. Market cap 15 billion. Income 5. So it's trading at almost 3 times revenues. That's only trade Sketches only trading at 1 times revenue. Is that right? 9 billion in revenues. 9 billion. Wow. Simple free cash flow margin though. Look at that compared to the others. Woeful. The only difference with this compared to my main metric spreadsheet is this is all 3-year average. 3-year average, and all here, all these margins up here are all 3-year average, whereas on my comp spreadsheet I haven't done that, but they are 3-year averages when it comes to here, which is also basically this here is on here as well. So these 3 here, so I can just look across, and then I've got the one that I'm looking at, which is why it's in blue, just so I know it's the one that I'm looking at. And then I can just compare it all next to each other. Probably slow my spreadsheet down, to be honest, by doing that, because I've done it twice, and I suppose I could just do it in the comps. I never thought about that until then. That would make a lot more sense, wouldn't it, instead of slowing my spreadsheet down. Let's see, gross margin 57, 52, 59. They're very similar, aren't they? Skechers is definitely the worst. It's got a better market cap than Birkenstock though. Book value 16. Skechers got very good book value, and tangible book is very good as well. If you were to use tangible book as like a proxy for liquidation value, not that you should, but if you were to do it very quickly, current ratio, interest coverage, problem. Interest coverage pretty good. That can't be right. Decker's interest coverage ratio of 370. Which one's that in here? Interest expense for Decker's 0. Have a look. That can't be right. So bloody. I was literally on the page then. What was deck? Okay. SEC deck. 10Q interactive data. Financial statements. Balance sheet. Oh no. Hang on. Income. Interest expense 935 million. That's just in the last 3 months as well. What's this one showing? I mean, that's gone up. Yeah, we're saying... maybe I haven't done my spreadsheet bloody properly. TTM interest expense. 2.4 million. That's something right here, is it? Decker's TTM interest expense. Oh, and it's okay. Oh, I suppose it would depend on what the in thousands. So yeah, 935,000. Wow, they're a very debt-free company then, are they? Yeah, I can't see any long-term debt. Oh, hang on. That's not what I wanted to click. This is. It doesn't appear. And they do have any long-term debt. Wow, okay. It's still wrong though, isn't it? Because the balance sheet says in the last quarter, yeah, not balance sheet, income statement. In the last quarter says we've had 935,000 in interest expense. Was it before over $1 million? And off we go on here just to make sure. Q1, there we go. Yeah, okay, so that's wrong. 935,123. Now, bit of the comps. I mean, your interest coverage is still huge, huge. Simple free cash flow of almost $1 billion. Wow. What's their stock price done then? There's Birkenstock on it. No. Oh, Deckers. What? Sold off hugely. Look. Where it was. I mean, that's not to say it wasn't hugely overvalued. Let's have a look. So the return on capital is really high. Really high. But yeah, 15 years. Oh, I don't know, because look at this. 15 years to buy the company on simple free cash flow compared to 34. Interesting. It's clearly the better company. That's why it's trading significantly higher than the rest. Look. Average return on capital of, you know, look at it compared to the others. From EBIT and simple free cash flow. Return on equity, significantly higher. That's on book measured equity as well. Interest coverage, huge. I don't expect this balance sheet cash. 200 million. Long-term debt. They're saying there is long-term debt. Oh, I'm on the wrong bloody one there, aren't I? Here. Moron. Short-term debt. This is probably the operating expenses. There you go. Yeah, it is operating lease liability. Good company. You know, what was it trading at up here though? To double 30 times, that would have been. Yes, where we are now. Simple free cash flow margin 15, multiple 15, so it would have been 30. We should have put it in line with Birkenstock, to be fair. What is 8? Gross margin average is the highest in CROX, so no, it's not Birkenstock, it's the highest. Operating margin around 20%. Just look at Skechers, it's miles worse. No wonder they're doing worse, it's miles worse than the competitors. Net income margin 14%, 17%. Simple free cash flow margin 3-year average 16%, 19%. EBIT EV of 4. Oh, let's not do anything silly. 6. Simple free cash flow to EV 11%. the return on capital on Deckers is massive. Very good business then. I mean, 30 times though. Would you pay 30 times for debt to equity? Current ratio, all of them's pretty good. In fact, CROX is the worst. Simple free cash flow multiple of 6, 30, 16. Simple free cash flow share, then if you were to take it to 10, you'd still be below Deckers. And it's a relatively similar business, other than the fact that your tangible book's negative, but they're paying off debt, then that ain't going to be negative forever. Problem is they've got goodwill which could still be written down because of Hey Dude, which is what I don't like. That's why I don't like goodwill or intangible assets for that purpose. So the liquidation value of CROX is still more of an issue. Higher, so very interesting. But it's a very similar company, really, isn't it, to Deckers? Deckers is significantly higher on the market cap, and on the EV's not as bad. EV's better compared to the market cap of Deckers. He got, I promise I've only done 3 years, but none of them are eating into the share count like CROX is either. I was thinking of something and now I can't remember. Oh, yeah. I mean, Deckers is trading at 17 times simple free cash flow. CROX is only at 6. We need to see what CROX's forward guidance is and compare it to what it was previously and see whether or not they've met it. Have you... Where are we? Simple free cash flow share, 13. So if you put 10 times multiple on that, and you're still not as high as Deckers, you've got a significant increase in price. Does Deckers pay a dividend? No, and they've had a stock split. Yes. Interesting. The 10 times would be up around this area here, which is where technically you've had some previous 40% upside. I mean, it's not huge, is it? But then it depends on what their growth's going to be, because they're close to $1 billion in free cash every year for the last 3 years. What forward guidance has CROX given over the, see how long if you say last When was that purchase? 5 years? Let's say 5 years since COVID. What forward guidance has CROX given over the last 5 years, and have they met or exceeded their own guidance? Thinking longer for a better answer. Oh, I've asked a question is struggling with it. Look. Gave it too much data to look through. I think I've actually confused the AI. To be fair, I've asked it to look through a lot. Let's see if it can come up with the goods. Testing AI's capabilities here. For 37 seconds. Right. What happened? Met. Okay, so 2021 they met it. 2022 CROX excluding 20% revenue growth. CROX, so they didn't meet that. Still did well though. Mixed. Miss CROX brand growth beat on Hey Dude. What they guided 10 plus 10%, 30% revenue growth. What happened? 11%. So yeah, I hit that slightly above our 10 to 11%. 27% operating margin. They beat that. Okay, so at the moment, they're saying what they're doing, what they said they're going to do. 2024, what they guided 3 to 5% revenue growth. 4% hit. Earnings per share on the revenue they met. Free operating margin guidance evolved during the year. Final release rather than a full year. Okay. Well, they guided another year of positive revenue growth and initial upbeat profit outlook. Withdrew 2025 macro. Yeah, okay. It's probably tariffs. There you go. Yep. Later commentary flagged tariff headwinds and softer demand. No full year score yet. Guidance withdrawn. Mixed, met, beat, met. Guidance withdrawn. Let's read on that then, shall we? Only other question is what the stated sector growth would be the same period was that met. Give specifics for China, which is where the circle taken off. I wasn't able to find any explicit statement about overall sectors or market-wide growth. Yeah. China footwear market is projected to grow. Alright. CROX own performance in China. Strong over performance in China, 23, 24, 24. Okay, 25 continued. China units saw over 30% year over year as the company leaned into what the hell's globalization, combining local designers. Okay. 70%, 20% over 30. CROX does not publicly provide sector-wide growth forecasts, but across China, its own growth has far exceeded general market expectations based on external sector estimates. With a broader market growing around 5% per year, CROX has consistently delivered 23 and even 70% growth in China. 70% zero list one though, and it's like it's easy to grow to start with. It gets harder as time goes on. What did they say here? Right. Due to macro uncertainties stemming from global trade policy, the company has withdrawn its full year 2025 financial outlook that was provided and is not providing a full year outlook at this time. Okay. Okay. When was this? Date? May the 8th. Very interesting. Non-gap. It's non-gap then. And they're using a lot of this is for their results, I suppose, when they bring out the SEC one, and I guess they've got to use gap. Don't know. Okay. I mean, what have we got underlying? Better the comps, right? 6 times simple free cash flow, gross margin better than Decker's, operating margin slightly lower. Then Decker's is worse than Birkenstock. Net income margin 17, 14. Operating cash flow margin's higher. Simple free cash flow margin average is higher. EV is lower, but simple free cash flow is higher. Return on capital was the second highest amongst these. Interest coverage, second highest. Yeah, we know the company's leveraged at the moment, don't we? On the debt to equity. Debt to capitalization is highest though, so 56% of the capital structure is debt. Which isn't great, but then this here, even the Bruce Greenwald one that I've got in just to check it against, this is from his earnings power value. Just want to make sure that they're vaguely similar, which it is. Okay, safe on the Z double prime as well. Yeah, interesting. I mean, I'm not going to give a recommendation. I don't give recommendations. I don't know what I'm doing. I'm just showing you what I see, what I'm reading into it, and I'm hoping that if you're watching it, then you're not going to do what I say. Please don't do what I say. I'm just vlogging my experience, my learning experience for people to watch, and hope that they find it interesting. And I hope mainly that I can get into contact and build a network with people that do know what they're doing, that can help me learn. This is probably the most interesting one we've looked at so far. Yeah. Interesting. I think for now I'm going to leave this video here. Have I got any more questions that I haven't had answered? The guidance is annoying, but I sort of understand it. Financial strength enabled us to return shareholder value through 61 million in share repurchases. My only issue with these share repurchases is they're not being retired. If they were being retired, then that'd be amazing. Has anyone else bought this recently? So who's Tyro Capital? What's their investment strategy? I don't really know. I noticed this as well actually when I was rewatching the video that I uploaded when I said, I don't know whether or not Joel Greenblatts actually involved. There you go, right at the top, Gotham. Definitely involved. Okay. It's quite interesting actually that Norbert got involved and there's not potentially more big value players involved. Who's Fund One? I've heard of that. Am I just thinking of something else? I think of something else, can't bother to look into it. Not relevant. Alright, yeah, there's no one else there that's 100%. So who's these? Singapore. 100% of the portfolio in it. Right, let's find out who they are. Because that's a hell of a... Who are... Private limited company, business activity, family office, investment, entire US equity portfolio is consistently invested in CROX. No idea. Family office or investment vehicle based in Singapore. No idea then. No idea. Right. Ownership. Who's got the highest ownership then? FMR. BlackRock, Vanguard, State Street. A lot of bloody asset building companies. I don't think Norbert Liu down there owned 1%. This is huge. Alright. Rightio. Here you go, look. Bit of technical analysis. I mean, Norbert Liu bought higher, didn't he, as well, apparently. So-called average paid. Historically significant price places, look. Boom, 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 boom. And again there. Boom. Here. Boom. Topped out for a little bit, came back down, bottomed out for a little bit. Not that I rely on technical analysis, as hopefully you've realised from the last 2 videos now, but there's a bit more to it than people think, is my opinion. Look at that. Midway through the channel, look how it reacts to it. If enough people jump on the technical analysis bandwagon, it sort of becomes a self-fulfilling prophecy, doesn't it? Right, okay, yeah. I'm going to leave this video here for now. Thank you for watching. If you do like what you've seen, please like and subscribe. You know, if I'm doing anything wrong, tell me, because I want to learn. Yeah, there we are. All right. Thank you very much, and I will see you on the next one.